Hi everyone, this is James from PipFarm, and today I'm joined with Anna, our favorite trader, as always. And our special guest today is Justin from a company called FPFX Technology. Me and Justin, we've known each other for 10 years, going back to the days when I was working in CTrader. And Justin was one of our business introducers, and he is also a technology provider. So he builds back office technologies for brokers and also prop firms. So when I first met Justin, we were working together on some projects trying to introduce CTrader to the US market. So this was a project that Justin was very, very passionate about, and we got to learn a lot about each other. So we're in Dubai at the moment. Justin is here attending a business conference, and we came here to meet cool and interesting people like Justin and show traders like another part of the industry. So you may notice that a lot of prop firms, when they do interviews and when they talk to people, they're actually talking to traders and kind of like showing like the opportunities that there are in the industry. But we want to show you the other side, what goes on behind the scenes, what people who are leading the business are thinking about, and also our colleagues and other people in the market who are all participating in making this industry work. So, hey, Justin, welcome.
Thank you for having me.
Would you like to say like a few words, like what is your role in this industry? Like how do you make a difference, and like what do you deliver to prop firms?
Sure. So again, thanks for the opportunity to be here. My name is Justin Hertzberg, and I'm one of the founders and CEO of FPFX Tech. And we do make a number of different enterprise technology solutions for brokers, but what we're best known for is end-to-end automation to support the operation, administration, and risk management of prop firms. We started the company about 5 years ago. We were the first SaaS technology provider in the prop space, and really helped to launch the industry in a lot of ways because we made running a prop firm accessible to smaller operators who had a captive audience but didn't necessarily have the manpower and infrastructure to facilitate all the different functions that were needed to run a prop firm. And we provided that technology solution. Fast forward 4.5 years or so, we helped to launch over 150 prop firms. It's a big number. It was a big undertaking. We've facilitated the sale of over $1 billion of prop challenges, and over 2 million traders have used our tech at this point. So we're very proud of that. It's a lot of work, and it's much more than me. Now we've grown to be quite a good sized firm, but it's been exciting to be part of this industry and see the evolution and changes that are happening almost on a weekly basis. So happy to share, my thoughts and views on it as we go through the conversation. But again, thank you for having me.
How did you identify the opportunity at the beginning? Because 5 years ago, prop firms were not a thing.
Great question. So in the company, I have two partners. And as James mentioned, I had an introducing brokerage business before we started the technology company. And one of my now partners joined that business in 2016. And when he came over, he brought with him some institutional relationships that he had developed in the trading space, one of which was one of the earliest retail-facing prop firms that was pretty well established in the futures industry, but they wanted to offer over-the-counter FX CFD trading in the same way. But they didn't really understand the market well because it is fundamentally different on exchange versus off exchange. And so we helped them with everything from setting up an offshore company, getting an MT4 white label, choosing a broker, integrating a liquidity feed. And then for several years, we actually helped them with their operations. And so we got to see behind the curtain their commercial model, the cash flow that it generated, the workload that was needed to actually execute that business model, and all of the back-end trading and risk activity. And by all accounts, this was a successful firm, but they were doing everything manually. And so as they grew, and they had no reason not to grow because the value proposition was really so compelling to the trader, they had to just keep hiring dozens and dozens of people to affect the business model. And I don't know if you guys have ever been part of a heavily manual organization. I don't think Spotware was ever that way. It was pretty well run. You end up with people just tripping all over themselves. And people assume one other person in the company is going to do something, and the customer satisfaction dropped as the company grew. And our takeaway in providing some brokerage support to this firm was that this is a great value proposition that traders will love. And you and I have been in the retail space a long time to kind of know what's around the corner. But we felt like all the workflow that was being done could be automated. And it just hadn't been put together. And so we just started to build it without a customer in mind. We just said, this is a project that we feel somewhat compelled to undertake, and just started to put the pieces together. It took us about 8 months to build the first iteration. And it just happened to be right place, right time, right solution that kind of caught fire in a way.
So that was probably the best decision you ever made
It was
in business.
it was a fortuitous one. It was we didn't know what we had, to be honest. Like I didn't have a crystal ball to know that it was going to become what it has become, whether our company or the industry as a whole. But we were entrepreneurs. We chased down what we thought was a good idea, and we're willing to invest the time and the development hours to build something and see if it was interesting.
But that's very rare, like in business, to build a product without a customer in mind.
Yes, it was a challenge actually, because any development project,
You don't have feedback. You don't have
you
like,
have no feedback, you don't have a spec, you don't actually know what problem you're trying to solve.
Yeah.
We were just sort of building the plane in the air. I believe that packaged the right way, I could put it in front of someone that didn't even know what prop trading was and help them to think, hey, this is interesting. I could put my marketing prowess and I can put this in front of my followers, or database, and they will like the value proposition and be interested in something that they didn't wake up knowing they were interested in.
and I've seen you do that.
Yeah,
with several brokers, and I guess you are playing a big role in brokers actually adopting this business model.
Yes, I believe that the early days of prop trading were dominated by influencers. You know, people that were nimble, were not bothered by or bogged down by bureaucracy. They were able to make decisions quickly. They saw an opportunity, they moved in, they capitalized on it, and that helped to spread the word about what prop trading is and became. But I think like any upstart financial service or financial asset, it quickly becomes an institutional product where you're going to attract different types of participants, you're going to attract sharper flow, you're going to require more capital, the margins are going to be driven down, and it very quickly became a serious business that required knowledge, experience, capital to run effectively.
Well, it never didn't need those things.
Pardon?
It never didn't need those things.
That's a great point. It should have had those things, but it was so novel that you could get away with it if you didn't have it. You could almost will it into existence and profitability in the beginning. But as more competition came in, driving down the margins, people started to feel squeezed, and then they started to deal with that through sales and marketing gimmicks, driving the price down, making the conditions easier. And that led to unsustainable business models that quickly ended upside down for certain firms. And you've seen that turnover in the space really over the last, say, 12 to 15 months.
Yeah.
My feeling is that this is obviously a different model than the traditional retail brokerage model, but one that requires a lot of the same elements and infrastructure to be successful. And I do believe at some point in time it will become regulated and should become regulated. And so I personally believe that brokers are in the best position to run prop firms because they have all of that infrastructure. They have geographic diversification. They have global regulation. They have compliance teams and marketing teams. They have their own platforms and liquidity relationships. They have all the building blocks. It's just like reversing the flow of onboarding clients and how you monetize relationships. So I feel pretty strongly that brokers should be in the space for one, that it is an existential threat to the traditional brokerage model. The average retail trader has a finite amount of capital. So they can invest it in a self-funded account, they can invest it in trader education. You probably started very similarly, or they could invest in a prop account. And so you have all these competing forces on the same amount of capital.
Yeah.
And prop trading to a lot of people is a sexier value proposition than having their own self-funded account. And so to some brokers, they are losing market share as a result of the growth and awareness of the overall prop industry. And so by embracing it, they can, stop that erosion of market share. And I think it helps them with one of the major issues that they've been having over the last, say, 5 or 6 years, which is the cost of client acquisition has skyrocketed. So for most, let's say, European brokers, I think the cost now to acquire a approved funded client is around 1,600 to 2,000 euros.
Yeah.
And what we're seeing on the prop side is cost of client acquisition is about 1/10 of that. So you can bring them in a lot easier with a lot less friction, and then it gives you the opportunity to actually showcase what it is that you do, get them onto your platform, show them your pricing, your products, offer them some incentive to become an actual self-funded client as well. And so there's a lot of cross-selling and upselling opportunities that I think it presents for the brokers, and a way for them to get in front of the right type of clientele a little bit easier than the traditional way that they've been onboarding.
So you actually went straight into prop trading. You never traded your own account.
I did.
You did.
I did.
And how long until you decided to switch to prop trading?
Just a couple of months.
That long?
Yeah.
And what was the value proposition for you?
So mainly the psychological pressure. And I think that most traders will agree with me. When you are working on your trading skill and trying to improve, like you detach more from the results when you know that the only thing that I can lose is the challenge fee that I've paid for, rather than the risk of the possibility of blowing the whole account. And of course, some people might say, oh, it's the same thing to deposit $500 on a brokerage account and buying a 100K challenge, for example. But looking from a psychological perspective, it's not really the same. So this was the main reason why I decided to focus more on prop trading rather than trading a personal account. And another thing was, back then I was a broke student, and I knew that trying to flip accounts was not a thing. I never believed in something that sounded too good to be true. So that's why I was thinking, why not to just try to learn and adapt on the prop firms model, which can give me the capital that I currently don't have, but can give me good returns in the very near future. So those were the main two reasons why I focused on prop trading mainly. And then there was a period of time when I was only trading prop firms, and due to the challenges that the industry faced in the past months, I'm trading both personal and prop.
One of the interesting things, and you kind of sparked it in my head when you talk about psychology of trading, and I find this fascinating, and I love the data that we kind of see through our offering and the firms that we service. Traders in prop challenges perform better than the average trader does in their self-funded account. And the parameters, the conditions of the program force them to have more restraint, more focus on risk management than they do when left to their own self-funded accounts.
This is very interesting because most traders, they actually beg for more flexibility. Like they evaluate the merit of a challenge when they're trying to decide the value, because you have like the price, you have the target, and then you have the drawdown. And they use these like things to decide if this is like good value for money. So they think the highest drawdown is the best, especially the daily loss. So we started with a 3% daily loss, which is, I think, what the lowest in the industry at the time, right?
Yeah.
Yeah, so we were like mocked for that. And I never changed it because I wanted to be conservative, at least with that. And I believe it had a very, very positive impact on traders' performance, because do you really need to risk 3% at any time? More than 3%? Like it's a lot.
It is a lot. If you have the right mindset of thinking of trading this account and making money from it, you should not treat it like, you should have a proper risk management. And usually the case with prop traders is that majority are just trying to squeeze as much as possible and flip account. It's again like people trying to make money fast.
Yeah.
So people think of having like a lower drawdown as, okay, I will have to take multiple trades in order to reach the profit target. But if you have a 5%, maybe you just need like a 1 to 2, and then your 1 to 2 risk to reward ratio, and then you're done with the first phase. So, and like this is just showing that traders don't believe in their skill. They don't believe that they will find another good opportunity. So they're treating challenges as casino. That's how it is for like 95% of traders. But to your point, yes, traders are asking for more flexibility because they're overestimating their self-control. And then they realize after a short period of time that having rules in place is actually much better for the trader, because it keeps you accountable. It's external accountability. So when you know that I have to follow these rules, you kind of develop good habits as a trader. And this is also showing which people have potential long term. For example, if you're a trader who cannot control yourself and you are hitting your daily loss all the time, this is a red flag, and it tells you that you have to work on your emotions. If you're a trader that is hitting the maximum drawdown, for example, it means that you can still follow a plan. You just have to polish this plan to become profitable. So yeah, there are lots of psychological aspects when it comes to different desires and criticism.
Yeah. I also believe it's because of like traders are very stubborn. I think we've discussed this before, but like Justin probably knows just as well as I do how stubborn traders are, especially when it comes to things like trading platforms. And I guess when we launched, there was this standard of 5% daily loss. Like everyone had it. And then you have this new company that is giving something different. And even something like this just like affects the stubbornness of traders. Like, this is different from the 10 other companies that I know about. So why should I do a different thing? And yeah, so that was me finishing my thought. We were talking a minute ago about brokers coming into the space and then being like very, very ready in terms of like the operational stuff, but they also could benefit from better customer acquisition cost because of the different types of marketing that prop firms are using. But the thing is, like, all the things that prop firms are using already exist and already could be used by brokers, but they're not using them. And do you think that they could actually really tap into this?
I do, and I believe that because they've seen it now. I think we have a lot in the trading industry as a whole. There's a lot of follow the leader. Someone figured out something that works. Every broker looked at that first broker and said, oh, let's emulate that, maybe try to improve upon it. But at the end of the day, you look at the broker landscape and they all offer more or less the same 4 or 5 platforms. They all use one of the same 5 bridge providers. They get their liquidity from probably one of 10 different sources, right? And so there's not actually that much differentiation between them, and they all market in the same channels. They all have IB programs that are largely the same commercially and affiliate programs that are largely the same, and it becomes marketing, execution, risk management, customer service. That's really what a mature industry becomes, whether it's trading related or really any other industry. But then you have something new and exciting that comes out and it sort of shocks the conscience. It's forcing them to look at the way they've been doing things and seeing, wow, all these other people have a totally different take on marketing, business development, branding, and they can mimic that. They can learn that. They can move their marketing machine in that direction if they want to. And I think they probably feel compelled to at this point, given the rise of the industry.
Yeah. I always felt like brokers are hindered by regulation. Like, they even, because you know how deep the compliance team can become in a broker, because it's like, it's the scary team. When they say you can't do something, like, everyone is scared into listening to them. And like, if you have a weaker management, then they could like become heavily burdened by like what the compliance department thinks. And then it like builds this like culture of basically it puts the whole company in a coma, especially the marketing team.
I sometimes, and back when I had my brokerage business, I would affectionately refer to the compliance department as the business prevention department, because it's exactly that. And it's a case of the tail wagging the dog, right? The owners, the stakeholders, the officers of the company should be the leaders.
Yeah.
They should have the vision, and then they work with compliance to say, this is what I'd like to accomplish. Please help me to figure out how to do it in a compliant and regulatory way. I think one of the other things that bogged down brokers in looking at this space and other initiatives is they're also bogged down by bureaucracy. They've become so large and they're governed so much by committee that they have to get so much buy-in from all the different departments before they can make a decision. And that's what opened the door for a lot of these influencers to really kickstart this industry, is because they didn't have that. They said, this is an opportunity. I think I can monetize it. I don't know everything that I'm going to be doing, but I'll figure it out as I go. And they just started. And that's how many of the brokers started in the first place. They were also young, entrepreneurial, sort of free-spirited, free-minded people that saw an opportunity and went for it. And then at some point you get stuck in your ways and your process, and you lose that entrepreneurial spirit. And I think this is forcing them to take a somewhat hard look and go, did we lose what actually got us to this place in the first place?
Yeah.
So that's, I think, another issue. And we've seen that. We work with enough brokers providing prop tech and trying to help them through the whole planning, building, launch phase. And sometimes we'll have 50 people on a call. You don't need 50 opinions here. Let's just have a few key decision makers and then disseminate the message. It can be frustrating to see how slow their process has become.
Yeah, and it's a waste. And it's also a waste of your time, because I remember when I was trying to do sales for CTrader, and you'd have to go to an office and you'd spend the whole day there, because you have to meet with the CTO, you have to meet with the head of dealing, you have to meet with the head of marketing, you have to meet with the CEO. And then I can't even imagine who else, but probably I had to meet with them as well. And it's probably the same, exactly the same as what you're doing. You have to convince every stakeholder.
But we have seen the difference. There are some brokers that we support from a tech standpoint that were very entrepreneurial. And even though they had the brokerage business, they focused quickly on how to differentiate the two businesses, brokerage and prop, found a way to move quickly, made decisions, and as a result, they became an earlier adopter. They rode the early wave of success, and now they're in a very beneficial and prominent position. and others were just slow. They started at the same time, but they couldn't get across the finish line soon enough, and there was an opportunity cost to that.
You mentioned previously regulations. So I know that many people have been asking about regulations related to prop firms. What is your opinion on, are we going to have regulations anytime soon, and how would those regulations look like?
I'll start with my wish list. I would like there to be regulation because I think it's important for the industry as a whole. I think it's important for customers to know ultimately who they're dealing with and to have a level of transparency in terms of how those businesses are operating, what their net capital position is, how they're marketing, how they're managing risk. And that's the number one mandate of every regulator, is to protect the consumer. And sometimes it's protecting the consumer from themselves. Sometimes it's protecting the consumer from predatory business practices and bad actors. I think it's important. I'd like to see it. Because I believe this has really become a real financial service, I'd like to see those protections in place and that accountability in place, as you mentioned.
Yeah.
How will it happen? I'm honestly not sure. In many ways, a lot of innovative financial regulation comes out of the US. We just had a new presidential election. We're going to have a new Congress. We're going to have a period of time where no major legislation is going to be proposed for approval. And even if it is, it's going to take some period of time before it becomes effective. So absent some sort of court ruling that establishes new precedent, it will take a while for something to come out of the U.S. So that probably means we're looking maybe at FCA or ESMA to come out with something. And obviously we've seen, and I think even been quoted in some of the articles around different central banks and country-specific regulators saying that they're looking at the space and they're voicing their opinions and views on it. I would like there to be regulation, as I've said. What I would like, though, is to, if possible, be part of that conversation, because I'd like to see sensible regulation where there's actually an understanding of what drives the industry and how best to protect the customer in the process. I would not want to see a knee-jerk reaction that's not coming from a place of understanding.
The hope is that nothing causes a knee-jerk reaction, because in the meantime, there is a lot of risk happening in the industry, and some of these companies are getting very, very large and taking on lots and lots of consumers, and there is some unknown instability, big companies can fall overnight. So we have to hope that there won't be a knee-jerk reaction, like you said, and hope the regulators will take the time to do consultation periods.
I hope they do. I do believe that even though we've seen some commentary from some regulators generally about the space, I'm not sure it's top of mind for them. I think that most global regulators are still trying to find the right regulation and balance around crypto, for example. I think there are other initiatives like we've seen with consumer duty regulations in the UK and things of that sort. There's other priorities that I think are ahead of this. Mm-hmm. And yes, we are seeing some firms go under and clients are losing funds as a result of that. But unfortunately, it's not risen to the level that it becomes the top priority for them to come in and regulate. But before it gets to that point, I'd love for that discussion to start. Yeah. And to have something in place before you have a very, very large prop firm that goes under and collectively their customers lose millions of dollars.
Yeah. What were the most common mistakes that the firms that went under did?
It typically falls into two categories. One is that they were undercapitalized. Mm-hmm. So I think like any gold rush, people don't think about the downside. They think it's straight up and we just have to get in and get started. And they didn't come in with any capital. Mm-hmm. And they just assumed traders fail. And they look at ESMA and FCA, required disclosures on broker websites, and they see, 95% of these clients failed and 92% of these. And so they go, oh, well, they just fail. We'll make money just by selling the challenges. We can't lose. And once you say something like that, you're destined for failure. So that was one of the big issues, is they didn't anticipate that they could have cash flow issues. Mm-hmm. The other is really just an underappreciation for risk. And that goes hand in hand with not thinking about the downside of a business in general. And as we talked about a few minutes ago, when more competitors came into the space, there was downward pressure on the pricing of challenges. There was downward pressure on making the conditions easier to attract more clients. And that works for raising your top line numbers, but it has an asymmetric exponential impact to the back end risk on the prop firm. And so that led to situations where firms very quickly found themselves underwater. And then you couple it with like what happened a year ago where MediQuote stopped supporting the industry and the sales funnel got shut down completely. And so all you had were accounts on the books that essentially represent liabilities. They're your cost of goods sold, but you had no new revenue coming in. And if you had already spent all that money on marketing or distributions, or in some cases, Lamborghinis, you didn't have any money.
Yeah.
And you were technically insolvent overnight. And that's really been a focus for us over the last 2.5 years, is sort of once we built our tech and deployed it, we started to see that the game isn't so much the technology, it's the back-end risk management. And so we started to develop a whole suite of tools around that. But not every firm listens. Not every firm wants to be conservative, and some found out the hard way that they went too far.
So what would you like? This should be an advice for the traders. What are the things that a trader should look for if they want to put their money in a safer place?
It's a great question, and it's somewhat tough to give the definitive answer that a listener might really want for this podcast, because
I can answer.
I'll give the answer, but where can you look? Find out who the principals of the company are. What were they doing 6 months ago or 12 months ago? Were they standing in front of someone else's car and showing off a watch, or were they in financial services? Did they run another business before? Are you buying into the lifestyle, or are you buying into a real value proposition? I think you have to kind of ask those questions and not just be blinded by the opportunity to trade a large account and potentially make money. You actually have to think, I worked really hard for this money.
Yeah.
And I need to think carefully about where I place it, who I entrust it with. Basic things, a little bit of due diligence just on the firm. Don't be swayed by the price, the discount, the trading conditions. It's also the reliability of the counterparty. And I think you just have to do a little bit of due diligence. But the problem without regulation is you don't really know.
Yeah.
And some of these firms do a great job of hiding who they really are, what their backgrounds are, how much capital they have. And we've seen all sorts of manipulations to affect the judgment of an end customer.
Yeah, and this is probably one of the most important roles that regulators play, is they take that burden away from the consumer. Yeah. Because in prop trading, the consumer is like fully responsible for doing all due diligence. And they can either they can do a superficial check and be like, well, this company is really popular, they pay loads of people, and I that's all I need to know. Or you can go much, much deeper, and you can look at who owns the company, who manages the company. And in some countries like the UK and Europe, I don't know about every US state, but you can even see the financial statements of these companies. And I guess a lot of companies choose to incorporate themselves in countries that none of that stuff is public, which obfuscates your ability of actually being able to understand the stability of any company.
I completely agree. And it makes it hard for the retail trader to try to make an informed decision. Yeah.
Especially with significant amount of marketing. The marketing clouds everything.
I was gonna say you're snowed in by all the marketing.
Yeah.
And once you're pixeled, I mean, it's following you literally to every website you go. It's on your social feed. You're seeing it everywhere. But you raised earlier discussion about prop challenges themselves create accountability, but that's also the role of regulators. They hold the operator accountable, and end customers rely on that.
So Anna asked me yesterday, if I'm worried about regulation, because unlike, probably other people from the industry, I don't have a broker backing me. This is not a broker-backed prop firm, which is the buzzword of the year. And she asked if I was ready or concerned, and I said no, because I'm running my business exactly how the regulator would want to run the business. I know where all the money is. I have the money where it needs to be. The way we conduct our business is ethical. I don't do anything dodgy with the prices. We don't interfere with the outcome of anything. So if a regulator wanted to come and check anything, I have nothing to worry about. There's nothing to get ready for.
I wholeheartedly agree. And I know that about you. And you and I, as you mentioned, have had a history of dealing with each other. And you come from the brokerage industry, and you know the right way and the wrong way of how to operate. And it's not complicated. Doing the right thing is never complicated.
Yeah.
Doing the wrong thing is complicated. You have to justify it to yourself and others and so on. And we try to do the same thing. The way we built the technology and the workflow that we built inside of it for the users of it was to create something where if someone wanted to come in and audit any aspect of their business, it's all there. Every transaction, every email, every movement of funds in one account to another account is all there. And if we had to make regular reportings and filings like regulated brokers do to some repository, we could build that workflow and go do that. But to your point, we come from the brokerage space. We built the technology and we encourage firms to run their business as if they're regulated, as if someone is watching everything that they do. And the hope is that they adhere to that and they do that in their business. But yeah, I know you. I know your ethics. I would think you would have no difficulty making the turn.
Yeah.
So the only difficulty is just making the industry aware of what is important, because this is what made the industry unsustainable, in my opinion. The traders are only looking at the easiest challenge and the cheapest price, but they don't think about the other side. And this is also very similar to what many of the influencers that launched their own prop firms did. They were just focused on instant gratification. Let's make money fast and now, rather than thinking of longevity and sustainability. I don't think that it will take a long time for traders to understand. I believe that majority of traders already understand
They're
that.
starting to, yes.
Yes, that it's good to have rules, because it's better to get, as one of the traders that we had said, I'd rather get paid 60% of the profits than 100% of nothing.
Yeah.
So.
And another one said he would do a backflip if he had to for his payout.
Yeah.
So this is like another topic, is like the consistency rules and like adding more requirements. So like I think, as you said, like challenges got cheaper and they got easier, which is like two things like that can't go together. So then like the C word in the industry is consistency. And traders don't like that word, which we've discussed a lot as well. Like why wouldn't you like consistency? This is like what everyone should aspire for. Like this is how you do business. You everything consistently, and you do it consistently for a long time. And this is how you build a credible reputation. So I don't think it's like a bad word, but this is like what traders like try to avoid.
They don't trust themselves. That's the simple answer. And also, like, for example, with the consistency rule, sometimes you might spot an opportunity that might give you 10 times more than what you actually make. And if there isn't a consistency score, you will not be able to squeeze the opportunity, because you will have to trade for a much longer period of time in order to meet the requirements for the consistency score. So this is like a limitation from one side, but from the other side, the compounding effect of consistency is usually healthier long term.
It's bigger than one trade.
Yeah.
So we like redesigned our programs. Like we're discussing in London, like some challenges that we're facing with the model that we had. And a lot of firms, they get a little bit scared about making changes because it could impact their sales and their profitability. But the mature thing that I've realized is, why should I sell a product that isn't sustainable? And why would I want to sell it for as cheap as possible and sell it to as many people as possible?
The question you were asking yourself is literally the biggest issue that retail traders themselves face, which is taking a loss, right? You realize that the model you might have been running might have been unsustainable, or at least say suboptimal, right? And so you have to make the decision, well, if I change my rules, my sales will go down because my program will be less attractive to the same people that I've been currently servicing, and they'll go elsewhere. Some will stay because they like us and what we stand for and so on. But your sales goes down, your liabilities on the books remains exactly the same as it was a moment ago. And so now you are knowingly putting yourself into a potentially negative cash flow situation for a period of time. But you are taking that one step back to take maybe 10 steps forward in your business. And it just takes someone, again, we talk about foresight and it taking the long view on their business. And that's what it requires. Sometimes you just take a loss. You learned your lesson, you make the change, you move on. If you ran the data and you came to that conclusion, I think it's great. Yeah, you'll lose some traders because they'll go to the path of least resistance, exactly what you're talking about. But that wasn't the trader you were after all along anyway.
Yeah, exactly.
And so if you have maybe a slightly smaller firm, but a more sustainable one where everyone can succeed inside of that ecosystem, that's a healthy business. And I don't think there's anything wrong with that. And certainly it's healthier than having a business that's unsustainable.
Yeah. So we do surveys. Like every quarter, we survey as many traders as we can, not just our customers. And I think last time we had like 3,500 respondents, and we run it for a month. And so far, we're up to like 2,000 for January. And 65% of traders so far think that prop firms with consistency rules are more sustainable. So I think in this like environment and era of like concern, and also about 70% of traders have traded with firms that have closed down.
Okay.
So as like this issue like touches more traders, they are like reevaluating what they think about rules and challenges.
Yeah.
I think yes and no, right? Because if you did a survey of people and if you asked them, are cigarettes and alcohol bad for you? The majority would agree.
And then you ask,
but they're still partaking.
Yeah.
And so awareness and changing your behavior are two separate things.
Yes.
It's true, yeah.
And so I think we're starting to see traders become a bit more sophisticated, a bit more savvy in their decision making, but still some of them will say, I know it's better to have a consistency rule. I still don't like it.
Yeah.
And they'll still go to a firm that offers the fastest path potentially to success, regardless of the counterparty risks that they might
Or the
be
likelihood
undertaking.
of actually like benefiting from that success.
I don't think that's specific to our industry.
No.
I think that's generational.
Yeah.
People aren't willing to put in the work that you are describing to achieve something, right? And you think of any other profession requires thousands of hours of education and training and apprenticeship, and before you're good at anything, doctor, lawyer, architect, anything. People think they can be a professional trader with a single challenge account, and they're not willing to put in the time. And so whatever offers them that quickest path to potential success, they still, a large percentage, still gravitate to.
That's human nature. That's again like instant gratification. And majority of people have low self-control to endure in like the longer path or the harder path in order to have like a long-term reward.
But I think older generations had a slightly different outlook. You know, the mentality was, you know, find a job, put in your 20, 25 years, you know, save money for retirement.
Yeah.
And they didn't dream as big. But I think in particular with social media, everyone sees the lifestyle, everyone sees the vacation that their friend was on. And in isolation, that person has a regular life. But when you see you're on vacation this week and you just got a car next week and so on, all of a sudden it just feels like you're the only one that's not living that life. And you're looking to cut corners. Just like it's unsustainable for a prop firm to have rules that don't make sense. It's not sustainable to try to catch lightning in a bottle as a trader and hope that you can really turn luck into a career.
Yeah.
So I think it's only a matter of time before traders like accept the new changes, because every firm that is going to give these like cheap and easy challenges is like only temporary. It's temporary until they decide to do something about it, or temporary until they are no longer with us. Like Justin gave a really great analogy about asking people if they know if smoking or drinking is bad, and then asking, do you smoke or drink? And you can't convince someone to stop doing something unless they're aware of the risks. Like if you were unaware that drinking is bad for you and you were aware, I would spend my time trying to convince you.
Yeah, I would say like some people never change, even though, or something really awful should happen for them to change. So they have to get hurt badly to change their approach and shift their mindset.
This is what we learned. Like 65, 70% of traders have traded with a firm that closed down. That's pain.
Yeah.
And in another survey we did, like 45%, I think, had payouts denied.
Yeah.
So these are those like painful experiences that make you reevaluate, like, how do you continue? Like, do you, and like everyone says it, like, we're here in PipFarm because we trust you.
Yeah. So there will be like this group of traders that experience this challenging and painful period, but there are also always new traders coming that have never ever experienced the prop firms shutting down, denied payouts. So there will be always different sorts of customers or different sorts of traders. In general, the industry has to adapt as well to different changes. So most of the firms that are offering cheap challenges and easy challenges are seeing that this model is not sustainable. Usually it's always about someone taking the first risky step and then everyone follows. Very similar to what you previously mentioned. They see that something works for someone else and it's really easy to just copy. So The same thing happened back in the days when we had time limits on the challenges. So everyone had time limits, everything was fine. And then one firm changed to no time limit, and many of them followed, and then it became the industry standard. It's going to be the same with new rules that are going to come, which will be most probably consistency rule for this year. We don't know, like this industry is very dynamic and things are changing very quickly. But I definitely assume that one of the rules that will be an industry standard from this year will be the consistency rule.
Well, one of the things that you raised a moment ago is whether or not, it's human nature, and some people you just can't change. And I think on an individual level, it's binary. Either you'll realize the error of your ways or not and act accordingly. But markets are also efficient. And the more traders that get burned by bad prop firms, more and more of them will start to ask the right questions. The more that one prop firm sees another prop firm come and go inside of 90 days because they were doing things that were unsustainable, they'll adjust their pricing. The analogy I look to is in the brokerage space, where there was a time when euro spreads were 3 pips wide, and we were there for that. And then I think it was FXCM was probably the pioneer of the non-dealing desk pricing with a commission, and dropping the spreads down to effectively what the intermarket was offering. And then everyone followed suit, and commissions went, maybe down from maybe $15 per lot to $10 to $7. But then it sort of stopped. It didn't really go to $2 commission, $1 commission, commission-free trading
because of technology. That was
there were technology pressures as well that costs had to be covered, but it got to the point where you couldn't go lower. Like the industry found its floor, and I think we'll see that here. It may take the form in a consistency rule. It may take the form of higher profit targets relative to drawdown levels. It could take a lot of different forms, and I think a lot of firms will try different things. But collectively, there will be a floor that's found somewhere.
So we were talking earlier about brokers joining the space and the marketing opportunity they might have. One of the things I was discussing with Anna the other day about the differences between how brokers sell and how prop firms sell. And, brokers, they have call centers, they will phone you, they will ask for deposits, they will chase you, as they're allowed to do, as long as they say certain things and don't say certain things. And the big difference that we have with prop trading is you buy a challenge and you've made your purchase and it's done. You fail the challenge, you're going to have someone calling, hey, I can get your challenge back, you just need to buy this one, there's this discount. And I think that could actually introduce some toxicity.
Certainly some predatory behavior. I would like to see it done the other way, which is, yes, you can bring a customer in through lower barriers to entry into a prop environment versus a self-funded trading account. But use that as an opportunity to uplift them. Go out and say, hey, we noticed that you bought 5 challenges and you failed them all. Perhaps you would benefit from joining our webinars that we run every Friday and hearing how we evaluate the markets and see if you could apply that. I'd like to see a little bit more integrity come out in the space. And I think that would be well received. One of the things that we're working on, again, I don't know if the traders will use these services, but we started to integrate market analysis and commentary solutions into our dashboard experience. So we'll have prop firms that will partner with these firms that provide independent, objective market commentary, trade ideas, analysis, and put it in front of them and say, here, it's right in your dashboard. It's free. We're making it available to you, with the hope that they'll take it seriously. And I think that's also one of the balances that regulation might help to strike is saying, the predatory practices aren't okay. You can't kick a man when he's down. Rather, you need to figure out how to lift him up and show that you are acting with integrity.
So it was really good that you mentioned about the healthy approach that the industry should take. And this is exactly what we've been discussing with James, to organize more webinars, to make the traders more aware of what they should be focusing on rather than just pushing promotions and encouraging them to make a larger damage from the one that they have already made. We hope all that this industry will find some form of stability. It has been very unstable for the past couple of months, but as you mentioned, the brokerage industry has been going through such kind of challenges, and they found the sweet balance. So I believe that the prop firm industry will also find this sweet spot where it's going to be sustainable both for the prop firms and also we as traders can be happy.
I think the initiative that you're taking is great. I think, from the very beginning, you went about it the right way.
Yeah.
We all have a role to play in this.
Yeah, some people have a high integrity role and some people have a cash grab role. You
But I
took the
mean-
high road, and congratulations to you guys on doing that and the success that it's brought you. Certainly, even though we are maybe competitors in the space in a way,
not
in a
competitors.
sense,
We have this-
but there's a mutual appreciation, and I
Yeah.
I applaud your success, and do root for you guys to continue to grow and do it the right way and help be one of the leaders as the space matures.
Yeah. Well, we really appreciate you as well, not just for coming here, but also for the almost creating this industry. I'm not trying to make you blush. So yeah, thank you so much for joining us, and it's been a real pleasure to catch up and have this conversation, and hopefully we were able to share some information that is not easy to find for traders, and you get to learn a little bit more about PipFarm and everything that's happening in this industry. So thank you very much, guys.
No, thanks for having
Thank
me.
you.
It's been a pleasure.
Bye-bye.